Hello traders, Dion here. Welcome to my channel. If you are new to this channel, please consider subscribing. In this video, I want to talk about draw on liquidity. Okay, how you can easily and consistently identify draw on liquidity or where the market might go next. In short, all right. So this has been one of the most consistent concern from most of you in my DMs. Now you need to make a video on liquidity and such. So when I talk about liquidity, it's not, I can't make a video, just one video on, I think I can talk the whole day. I'm talking about liquidity, okay? So this video will just help you at least clear some things up, okay? When you're talking about draw on liquidity, draw on liquidity, it's a tool that you can use for you to at least have a know-how, okay? Have some sort of projection of where the market might go, of where price might reach to. All right, you don't need to be always guessing where the market might go. You need to have some sort of idea. Okay, so in order to easily and consistently identify draw on liquidity, you need to understand that price is only doing two things. Okay, it's either drawing to highs or lows, or it's trying to rebalance. Okay, it's trying to go back to these imbalances that it left. Just those two things. Okay, so first it's trying to seek liquidity. When it's seeking liquidity, it's taking out the highs or the lows. In this example, you can see it just took out that swing high. All right, so when we say in this internal range liquidity is trying to offer fair value, those imbalances those imbalances are not fair. It means price is not fairly valued. Okay, it's not offered fairly here. There are still imbalances, so it has to rebalance. Now after rebalancing this price here, it now has to take out a certain external range liquidity. That's what you need to expect when you are taking trades. Okay, if you are taking trades in internal range liquidity, your final take profit on the higher time frame can go, okay, to that external range liquidity. Don't worry, we'll get to the examples later. It is going to be more more simpler. So it's not that complicated. You just need these two things. Okay, all right guys, so this is a simple drawing of how price moves. It's not complicated, like I said. uh, so this is your traditional market structure mapping. Okay, if you don't know market structure mapping, you can go back to my previous videos, but this is a traditional market structure mapping. So uh, here you can see when the market was going down, okay, this is what we call a pullback. Okay, this right here is your inducement. Now when the inducement is being made, you can see the market takes out this low here. Okay, this low right here, this is what you call your external range liquidity. It has taken out a lot of stops right here, a lot of buys that were lying just here. Okay, this has been taken out. So that process of market now taking out that external range liquidity, this is what we call seeking liquidity. Okay, this leg right here is just seeking liquidity. And then when the market now tries to go back, okay, into that fair value gap that it left, it's now the market trying to offer fair value, or in short, it's just rebalancing. Okay, because there's an imbalance here. Now these things are not uh, they are not going to work that well if you don't consider things like bias or structure mapping or discounts or premium zones. Okay, you need to consider all these other things for this to, to work according to the way you want them to work. Otherwise, especially if you are not a scalper like me, if you are not a scalper, you definitely need to make sure your structure mapping is on point. Okay, when the market tries to go back to rebalance that fair value gap, at least you'll be ready to jump on the up, because you already know that in this case you already know that external range liquidity has already been taken out. So when you pair that now with time, let's say you are trading in the London zone or New York session, at least you know what the market has already done. You know where the market is coming from. Now you have an idea of where it might reach to. Okay, because it has already taken out that internal range liquidity. Okay, now you need to expect it to go to some sort of, this is, let's say this is 4 hour chart or 15 minutes or 1 hour, whatever chart that you are using, and then you are trying to hold. I'm not a swing trader, so I don't really hold. If you know me, I don't hold trades for that long. Yeah, so if there's a this is, if this is your low, if this is your new low, this can be your final, this can be your final take profit here. Okay, another thing, there can be other internal fair value gaps just here. All right, I think maybe I'll just make another video on that. You also definitely going to have internal swing highs and swing lows. Okay, the market doesn't move this smooth. It's never this smooth. Okay, let's go to the real chart now. All right, guys, so this is the GU on the 15-minute time frame. This is the traditional market structure mapping. Okay, so I'm not trying to talk about market structure mapping. I just want to show you why the market moves a certain way. All right, so when some of the points that you need to focus on are these points where the market drops aggressively. Okay, the market does this to take out liquidity. This is seeking liquidity. Okay, it's just taking out these relatively equal lows here. So this is external liquidity being taken out. And then when the market starts going to the upside, it's not just going to a random place or anything. Okay, if it has taken out external liquidity, there's a high probability that it's just going to seek internal range, or it's just offering fair value or trying to rebalance. All right, because you can see this big 15-minute fair value gap here. The market is just trying to rebalance. Now, for me, I'm a scalper, so even if I tried to enter here under the 1 minute time frame, for you as a swing trader, of course, you're expecting the market to drop all the way to the downside there. And it can do that. It can do that, of course. I can still see liquidity down here. It can do that. But if you are, even if you're a swing trader, I would advise that you try by all means to learn scalping. Yeah, it's really going to sort out a lot of issues for you. Yeah, just try, if the market, if you entered somewhere here and then you can't get any profits in this leg right here, it's going to be very hard for you to be profitable. Okay, you would rather take some profits off and then hold maybe just 2 trades and then let them run. If they hit your final take profit, that is just going to be a bonus for you. Otherwise, try by all means to take out profits. It doesn't matter how good you are with reading market structure, try to take profits, because that's what we are here to make money. Okay, so Here you can see even when it hit that fair value gap there, it started dropping. Okay, it started dropping and then made a swing low here. After it made this swing low here, it came down to take out that swing low again. Okay, after reacting to that small fair value gap there, it came down, took out its own um, swing low here. This is external range liquidity. So these are internal structures now. Okay, this is how the market moves. It takes out that external range liquidity here. Okay, it's taken out, and then you can see after taking out that external range liquidity, you can see there's a fair value gap here. But the market, like I said, it won't always just go to the first fair value gap that shows up. Okay, maybe it's trying to react to the premium of that movement, this movement right here, this whole movement here. Okay, you can see the market trying to go back. All right, so here you can see when it went up, reacted to that fair value gap right there. Okay, and then it was still reacting to that fair value gap there, and then dropped. After dropping and then taking out this external range liquidity down here, let me remove this. After taking off that external range liquidity down here, and then the market continues going to the upside again, you can see here again it skipped. After taking off this external range liquidity here, it skipped this fair value gap here. Okay, and then went all the way now. So in my mind, what is supposed to be happening now is that this fair value gap, let me just draw it, this fair value gap here has now been completely filled up. Okay, and it has now been invest. Okay, the market just invests this is already used up. Okay, so I just I need to expect the market to bounce off this fair value gap here. Even if you don't know what an inverse fair value gap is, you can do this. After taking off that external range liquidity here, you can see the market as it was moving. As it was moving, it was leaving these fair value gaps here. Okay, and it looks like it's trying to react to that fair value gap. So if it tries to make a swing low in this fair value gap here, you can expect the market to take out that external range liquidity next. So that's how you read your price movements. Okay, don't make it complicated, and also don't think it's that straightforward. Okay, that's another mistake some people make. So when you watch one video on liquidity, don't think you now know how price moves. All right, but if you try to just go back to your charts, whether you are trading gold, you are trading whatever, try to, you can even be marking, okay, how the market is moving. It's going to be simpler for you, so that when the market makes these big moves here, at least you have an understanding of why it's doing that, not just guessing why the market did that, or you'll be having those wins that are just going to be by luck. Okay, and those are the worst. So I just wanted to talk about that a little bit. I know I've been off for for the past I think 2 months now. I had some issues I had to take. I had some personal issues I had to take care of. So yeah, just wanted to talk about this today. Otherwise, have a have a good trading week, though it's about to end. Watch out for my next video. I might make another one. Maybe if you have questions on the same, you can just ask in the comment section. Otherwise, till next time, happy trading.